What's going on, ladies and gentlemen? This is Danny from Markets Protocol. In this video, we're going to talk about retest versus rejection candles in trading Forex. Okay, so it's a major concept, and you guys have decided to, vote for it. This was the highest ranking video on Friday to be made. So here it is. The wait is over. Now you can finally watch it and understand the differences between these two different candles appearing on your charts. Okay, so retest versus rejection candles. Okay, first let's talk about retest candles here. Okay, now retest candles will form in two ways. Okay, so let's talk about the first one. Okay, the first way you're going to see a retest candle is after a breakout. Okay, number two is after a false breakout. Two different ways you can look for retest candles. Okay, now majority of the time after a breakout and after a break and retest. Sorry, a false breakout. Okay, so two ways you can spot this. Okay, now in terms of breakout, what happens? Let's just say price is consolidating. Okay, I'm gonna keep it very simple in this video so you understand it. Okay, we're gonna also go over previous market structure on gold to help you understand the breakout and false breakouts. On top of that, retest candles and rejection candles. So this video is going to be jam-packed with a lot of annotations, hypothetical examples, previous market structure examples. So if you want to grab a pen and a paper, or if you want to take notes digitally, this will be the perfect time to do it. Grab it right now. So we're going to go over a lot of examples here. Okay, now first, let's talk about breakouts here. Okay, let's just say, hypothetically speaking, price is consolidating. Okay, between a resistance over here and a support. Okay, typical example of a consolidation. Sideways movement in the market, price is not really trending up or towards the downside. Okay, now let's say price has previously trended bearish here, came all the way down, currently sitting at a strong demand area for price. So let's just say if price decides to break and close above this resistance, that means we are holding the demand at the bottom and we're closing above the resistance. Okay, let's just say we close above resistance. Okay, next candle has to retest the resistance, turning into support, and breaks the high of the previous to continue going bullish here. Okay, but 90% of the cases, the candle may or may not continue going bullish here. Okay, it might just ends up being a retest candle. Okay, now let's just say this is happening on a 30-minute time frame. Okay, in 30-minute time frame cases, you will see a candle closing above resistance, which you are looking for a closure. Okay, next candle over here breaks the high of the previous, but may or may not continue going bullish. Okay, there could be two reasons for that. You maybe are trading at a time where there's not a lot of volume in the market, but starting to pick up volume. That's why we had a closure in the first place. Okay, so what this candle has done in shorter time frames, like the 5-minute time frame or 15-minute time frame, what this candle has done is pretty much, in terms of market structure, what happened previously, we have created, broken above resistance, close above resistance, created new highs over here. Okay, we have retested pretty much this resistance over here, and we have turned it into pretty much a support as well. Okay, that's what happened there. Okay, let's just say this is happening on a 15-minute time frame. We broke above, closed above, created new highs. This two candles combined together is your 30-minute candle closing above resistance. Next candle retests that resistance, does not close back inside the range, stays above that resistance. Next candle creates a support above resistance, closes bullish at resistance. So what this candle has done specifically is closed bullish and created support. Okay, now in terms of 30-minute time frame, let's just say 30-minute closed like this, a breakout. Okay, next candle has wick down, closed bullish with a wick in the bottom and a wick on top. So this turned into a 30-minute retest candle. Okay, what you have to do is to make sure that candle has closed bullish though. Okay, as long as that candle is closing bullish, the probability for the next candle to continue going bullish is very high as well. Okay, So this is the scenario where it could happen in terms of breakouts. Now, what about false breakouts, as we talked about it? Okay, so in false breakouts, let's go back to the very basics here. Let's just say you have a resistance and you have a support. Okay, price is consolidating between support and resistance until we have what? A breakout. Okay, so let's just limit this. Perfect. Let's just say we have a breakout. Candle close above. Okay, next candle closes above. Similar structure. You're expecting the next one to, continue going bullish. Goes up to resistance. Okay, ends up, let's just say, rejecting there at resistance and closes back inside the range. Okay, now this resistance, since we have closed above it, we need to stay above it in order for price to move up. But if it closes back inside this range, as you can see, something like this, then the whole move up is a false breakout. Okay, now after a false breakout, you can expect what? A retest candle. Okay, previously this was acting as a resistance. Now it will, sorry, this was acting as a support. It should be acting as support, but we have closed back inside here. Okay, so what the next candle has to do is to retest that area, turn that into resistance, close bearish, and the next candle should be able to continue going bearish and further break below previous rejection zones or rejection areas, which is a support. Okay, if price simply could not maintain its move up, it will continue going bearish and further break below the previous supports as well. Okay, this is the simple idea based on price action. Okay, now this retest candle happened after a false breakout, which we just mentioned. Could happen something like this. Could happen in a bullish trend, could also happen in a bearish trend. So I'm giving you an example happening on a bullish trend, let's just say, false breakout towards the upside. Okay, and we're gonna go over previous market examples too, just to highlight and give you more clarity, since we're doing hypothetical examples here. So let's just say this is happening on a 30-minute time frame. So what can you expect from this candle on a lower time frame? Let's just say on a 15-minute time frame or a 5-minute time frame. Okay, on lower time frames, let's just say now if you were to look at on 15-minute time frame, what you might see is, let's just say, the breakout is a little bit bigger. Actually not. Let's just say something like this. Price come back here, created lows. We will have to go up to retest this area, turning into resistance. The only way we can turn it into resistance is when a candle closes bearish. Okay, let's just say candle close bearish there. Okay, now we have retested this area, which should be acting as support previously when we came down to retest, but failed the retest, turned into a false breakout, closed back inside the range, price created new lows, retested, turning into resistance when a candle closed bearish. When the next candle here breaks the low of the previous, you can expect price to continue move down, and this is a tradable move here. Okay, this is a tradable move after a retest. So we're talking about retest candles here. Okay, so if this is happening on a 15-minute time frame, ladies and gentlemen, what you might see on lower time frames is a 30-minute candle, something closing like this. It has a high showing you a retest is done. It closes bearish. Next one, as long as it does not break the high of that bearish retest candle, breaks the lows instead right over here, we expect price to continue going bearish here. So this is a tradable move which can happen in the future for you if you understand the retest candles. Okay, now this was based on a retest candle. Now let's talk about rejection candles. Okay, and then we can go into previous market examples combining the retest and the rejection candles. So what about rejection candles here? So let's draw first hypothetical examples based on rejection candles here. Okay, so let's roll this. Now we are talking about rejection candles. Now this can happen in a bearish trend. This can happen in a bullish trend as well. Okay, so this happened recently on Friday. Okay, so I'm going to bring up the same example here hypothetically and show you the actual example. Okay, so let's just say you have a resistance formed here. The price came up. Okay, came up over here. And when we tried to break above this resistance, we could not break above it. Instead, what we end up doing here is basically forming rejection wicks. Okay, this is a key concept to understand here. If you see at resistance, there is a lot of rejection wicks. Okay, price tried to break, above that resistance, but failed to do so. Okay, something like this. This has turned into a rejection zone. Okay, this is a rejection zone, and this is the end of that rejection zone. Okay, so if we have to continue here towards the upside, we need to break above these rejection zones. We need to break above, create support above it to continue moving up. Okay, now in terms of trading, if you see price coming back into this area, trying to break above it, but if it does not completely clear this rejection area, does not close above it, there is no probability for price to continue. Okay, very likely if this is a rejection zone, price can actually come into here, reject, close bearish, and this turns into a rejection candle. Rejection candles will likely happen at previous rejection zones. This is what you need to write down in your notes. Previous rejection zones is the area where price can come into, reject, and close the other way. Okay, unless we clear it completely, there is no move towards the upside. Rejection previously, we could reject here again. This could turn into a rejection candle, and the next move could be towards the downside as long as we stay below this area now. Okay, so this is a hypothetical example. Okay, now what I will do, I will take you to the 30-minute structure where we took trades on Friday based on this idea. Okay, so let's go to the top. Perfect. This is from Friday. Okay. On Friday, what we had, ladies and gentlemen, we had a trend going towards the upside, as you can see over here. Let me just double check the timing here too. This is the time, Friday, December 9th, 6:25. Okay, we came to the markets at 7 a.m. Eastern Standard Time. Perfect. Somewhere around here. Okay, so what was happening during this time on Friday? We came on Friday, we saw that the trend was bullish. This was a consolidation taking place. We had a closure above that area. We trended towards the upside. Okay, and after we trended towards the upside, this turned into a major support and price was trending towards the upside, but the momentum towards the upside was getting weaker, as you can see over here. Okay, this channel building up towards the upside, if you want to call it a wedge pattern, you might want to call it perfect, no problem. You guys want to give it fancy names to it, no problem. Okay, what I see here is a support which price has to break in order to continue moving towards the downside, and we have a demand for price formed right over here. Okay, why this is a demand for price on 5-minute time frame? Because once we broke above this resistance right over here, we created new highs, created a higher support, and we pushed up. So any area on your chart where price picks up momentum either towards the upside or downside, that will be either your supply area or demand area. In this case, we moved up. Okay, we moved up in this area, so this will be your demand for price. Okay, also a demand zone. Okay, demand zone for price, as you can see, we created a higher support. If we break this support, we can continue towards the downside. Now what happened on Friday? We had a news event at 8:30 a.m. Eastern Standard Time, which was the PPI, producer price index for United States. With that news, we broke below because it was good for the dollar. Okay, numbers came out good. As a reaction, gold turned bearish. We broke below a support. We came towards the downside, tapping into demand here. Okay, so after this structure, what we had to do, we simply had to wait for price to give us confirmations to enter a trade. Okay, now after that news event, we had another news event, which is consumer price index, I believe, or consumer sentiment report coming up at 10 a.m. shortly after. So this was pretty much at 10 a.m. 10 a.m. Eastern Standard Time. So news event. Now, what's happening here, ladies and gentlemen, let me take you back again. This was the structure, price was developing. With news, we trended towards the downside. This was the previous structure low. Price has to break to create a new low. So as long as we stay below the structure low, we can definitely expect price to continue towards the downside. Okay, so now let's take you back to the structure. This is the structure, and this is where we formed a rejection zone. Why this is a rejection zone? You see multiple wick rejections in this area, and this is a resistance too, as you can see right over here. Okay, so this is how the trading idea developed. This is a rejection zone. Whenever price comes into this rejection zone, unless we close above it, there's no guaranteed move towards the upside. So this is what we monitored heavily on Friday. If this rejection zone breaks, we close above it, we retest this area, next candle breaks the high of the previous, we continue up. Okay, what happened? We rejected there at a rejection zone. This was the outcome. Rejection zone right here, staying below that previous structure low. Okay, new lows are formed. In order to retest these lows, coming down to it, we need to hold this rejection area. So at 10 a.m. Eastern Standard Time, we had a news for the dollar. We came up into this rejection area. We tried to break above it. As a result, we rejected here. Previous rejection zone, we formed rejection here again. Candle broke above it, closed back inside the range. This is a perfect candle example of a rejection candle. Okay, right here. Rejection candle in a rejection zone, closing back inside the range. Next candle breaks the low of the previous. We go towards the downside. Okay, now the only low to break to enter sells for myself was right in this area. Okay, this is the previous structure low. If price breaks it, we can expect price to move down, retesting the lows right over here. Okay, so I'm going to show you a little bit of a recap of the live stream from Friday where we took this trade, and in that video you can also hear me explaining how this trade will be taken, and I will show you where the trade ended to, and I was in that trade. Okay, so what we're going to do, we're going to turn off the music so you can hear me on the live stream there. Perfect. Is it better for the next candle to go? Yeah, it's going to be better duration on that trade. Once again, highlighting you the trade opportunity here. Big rejections on the left-hand side, staying below 1798, which was a support previously. Now acting as resistance. We tried to came up here, false breakout. With news, we tapped into here, rejected. Broke 1800s, but rejected. Closes bearish here. Current candle, lower high, lower low. Headed for the zone to break at 1795. Oh, sitting right close, very close. A minute left. It touched it. No activations yet. Let's see. No activations yet. Next candle takes out. Should be able to continue since we have 40 seconds left on this current candle. Let's see. It tapped into entries but did not activate it. Let's see. Okay, so you heard me explaining the trade there. Okay, so how I enter the trade is basically price broke below that zone, which I highlighted right over here. This is a rejection zone in a rejection area. Only if we can close above here at 1800s, we create a support above it at 1800s, then we can continue further back up. Okay, what happened there is price rejected in a rejection zone. We have a rejection candle. Next candle had to take out the previous zone to continue towards the downside and going back into demand area at 1790s on gold on Friday. Okay, so we broke below this low and I used a pending order to enter this trade. Okay, so what happened is We broke below that area, as you can see, right over here. We also closed below that area too. Next candle breaks the low of the previous. We can expect price to continue moving towards the downside. As you can see, we started to go in profits. Looking at the range, we have a Victor fill on the left. This low was formed with the news at 8 a.m. Eastern Standard Time. As you can see, the time over here too, 8 a.m., 8:30 a.m. actually. This was the low formed at 1790s. In order for price to continue, break that zone, we have a Victor fill on the left. This entire area was tradable. Okay. And as you can see, as price was making its way down, 10 pips, 14 pips, 15 pips, I was locking in partial profits. Price is moving down, tapped into the targets here at 1790s, and the trade was closed there. Okay. So this was the trade taken based on the idea of a rejection candle taking place in a rejection zone. Okay. So hopefully this video helps you understand the differences between the two. Rejection candles and retest candles. In terms of retest candle examples, I can give you that too. This was a rejection candle example based on the previous market environment. In terms of retest candles, we can talk about that too. Okay. Now, in terms of retest candles, you can pick out so many different examples over here. Okay. In terms of 5-minute time frame, let's just say, let's grab the structure over here. Okay. You can literally pick out any structure. Okay. Now let's assess the market from here to here. Okay. This high point to this low point and retesting that high point. Okay. Let's just take this example, for example. Okay. What's happening here? Trend is bearish. We form resistance here. We're still moving bearish, but we are moving weak in this area. 1790s, once again, a strong demand for price. Okay. Now, price is making lower highs and lower lows. Okay. Anytime we break above the previous highs or close above resistance, this is a change of a sentiment or change of character, some of you call it. Okay. So over here, we broke above the previous structure highs. Okay. We picked off a demand for price right in this area. Okay. After we broke above the previous structure high, we have done a retest. Okay. You spotted it right here. This is a retest candle. As long as that candle closes with a wick on top and the bottom, the body is bullish and we are well supported above that resistance now. Next candle takes out the high of the previous and you have clean range on the left, we can definitely clear it. Looking left, we have cleared that range. So this is an example of a retest candle. Happens after a breakout. This is a well supported breakout right here. Also happens after false breakouts. Okay. Now, in terms of false breakouts, once again, you can find structures right in front of you. Okay. So let's say you were to check in here. This is Friday again, but this is 2 a.m. pre-market London session. What do you have? A resistance over here. Okay. Resistance is at 1795. Looks like we have closed above it with a bullish candle. Next thing you see, we close back inside the range. Okay. We close back inside the range. Okay. Close back inside the range. That means we're going to break below previous supports. We broke below previous supports right here. And then we have done a retest. Ladies and gentlemen, we have done a retest right here. Okay. Price broke below support. We have formed new lows right here. We have candle that closed bearish in a direction of a candle, in direction of a trend, which has picked up bearish here too by a false breakout. False breakout to the upside, close back inside the range. Now the trend has turned bearish. Okay. We break below the support. We create new lows. Candle closes bearish again. That's your retest candle. Closing bearish. Next candle direction is towards the downside. So that's another example for this. However, if you combine the structure all together, and if you were to look at 15, you might see a candle, one candle closing bearish here. So let's highlight this area, take it to 15 if you can validate it. Now let's find where this highlighted area is. Perfect. Okay. Based on 15-minute time frame, what do we have? Based on the 15-minute time frame, what we can do is remove this. This is the exact area. Okay. What happened here? This was a support that we closed below. Next candle direction is technically towards the downside. And we are looking at a time where there's good volume in the market. This is pre-market London session on Friday. Okay. Now, can you consider this as a retest candle? Yes, you can also consider that as a retest candle because it has broken below the previous zone right over here. Broken below the previous zone. It has also closed bearish. Next candle direction is technically towards the downside. As you can see right over here, next candle did not break the high of the previous, continued to fill the range on the previous candle, broke the lows there, continued towards the downside. Okay, so these things you can find it on your charts as well. Okay, the more you trade, more experience you build in the market, you're going to be able to see more of these things happening. Okay, so hopefully this video helps you understand the differences between the two, retest candles and rejection candles. And if you have any other questions regarding this topic here, feel free to leave a comment on this video, and I will be more than happy to answer your questions on this video as well. Ladies and gentlemen, thanks for tuning in and watching this video. Put a thumbs up on this video, subscribe to the channel if you haven't already, and we will see you on Monday, 7 a.m. Eastern Standard Time on live New York trading. Until then, peace out.